Hey guys, this is Julie. I'm going to share some things with you and show you some magic, okay? Sit back and wait for your brain to be blown, okay? This is the VIX 30 minutes, and I've got a daily distribution calculated on the session open and a daily distribution calculated on the session close. And then I'm showing some outside the distribution levels. And this will make sense to you going forward. So we'll just dive in and then explain it as we go. So the white lines are the first standard deviation, and price stays within the first standard deviation 68.2%, right? So most of the time we're trading inside the chop. When it moves outside the first standard deviation, that's when it can start taking off, going to your targets, your tails, and they can extend multiples of the distribution. One time is a very popular choice for the algos. Like right here, we had a distribution right here, the 3 to the 3. Let me move this out of the way so you can see it. Or the red to the green right here. So right here, that red line and that green line is one distribution of a daily range, and that's going, excuse me, line. The daily close, and so it's measuring PTA3 to PTB3, the red to the green, for that full daily range. So you've got your middle of the range between these two white lines here, and you'll see me fib that all the time. That's the daily mean, and I always want to know where the daily and weekly means are when I'm trading, because if we're staying inside, the 68%, chances are that line's going to get hit, right? Okay. So you can trade to or against it. Headwind, tailwind. So what we can do is take this, make a copy, and then put it on top of the distribution. And that's one time, right? One time the distribution. And there is my line. It's very faint. Let me thicken it up so you can see it. So I can add tails outside the distribution. They're called fib levels, and then I can tell it how far to go above or below the distribution. So going above the distribution, profit targets above A versus profit targets below B, and then 1, 2, 3. But I can put whatever level I want. So one time outside the distribution, this PTA3 fib line, sorry, the fib, PTB4, this one, let me make it thick. And that is right there. I just made it thick. So there you can see it. Target reached. One time outside the distribution. So when you learn that you can measure these ranges with a certain degree of accuracy, then you can start preparing to trade volatility. So if volatility is low and falling versus volatility that is high and rising. And what is so helpful for me is I can measure the range expansions and just focus on those when the range is expanding outside the standard deviations going to the tails. Or at least know that, you're trading inside the chop, which it spends most of its time doing. You can just see it stay inside all of these days. Inside, 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 inside. Here we got a little bit of action on low vol pop, but otherwise inside, 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 inside. Look at this. All these little tiny, tiny, tiny bar days, very low volatility inside this one washing machine chop city, and it's just been killing everybody. So, but at least, I can see when it leaves the standard deviation and starts moving out to the targets, and I can put algorithmically where I want to go outside that distribution, because if it leaves the 1, it goes to the 2 and or the 3. 1, 2, 3. And then outside tails if you can get so lucky, right? So, as a scalper trader, but just being able to know where you are in the distribution to be able to trade that with ES, as well as the threshold of the volatility. If I were to maximize this volatility and scrunch it up, you can see that we've been extremely low vol lately, since April. Got up above 5, like maybe once or twice, but not much other than that. Extremely low. Point 0.5. So here's like point 0.3, point 0.5. Here's your 1. And we had a brief excursion over the 1 that came back down. But you can come back and see on prior um, examples. Once it breaks point 0.5 with strong upward um, vol slope, it is likely to, have a second or third day of that um, before it comes back in. Once it starts coming back in, it decelerates pretty good, especially in this low vol environment. So anything over a 1 typically was sold for the vol, but in a high vol situation, that's going to change. But there was your 1. They were selling the vol on these 1s. And then here was a 2. So right here, this January 25th, I'm going to put a vertical marker on this. Break the 1 and go to the 2. Right? If it breaks the 1, it goes to the 2. And then it came back in. That was a good sell. Okay. So there's another 2 sell. And another 1 to 2 profit target. Didn't quite get up there the first time. Nice. All right, so here's some more 1s, but you get the picture. Now here was some high vol. This was March of 20, right? And so we got the big almost 5 touch, but these 4s were nice. 3s, twos. So going from the two to the three, right, was your trade. And then here we went from the three to the four and then back in. So expect, because we have been so compressed, that a move out is going to be extremely noticeable. I mean, really noticeable. So keep your eye on the threshold of the VIX. I post those levels a lot for a reason. And like I said, we've been so compressed inside the ones. So I've got the other chart up. So I'm going to try to, yeah, put this together like this. So the ES is above it and the VIX is below it. And so you can see the ES has been trading inside its one at the same time the VIX has. And when the VIX broke up, the ES was able to sell down a little bit. Got to its target. And the VIX got to its target. So, and here again, you can see that, when they do break out, they go to their twos and threes. Um, it's opposite, it's inverse most of the time. So here you can see that you had a long vol long um, right here. Well, oh, I'm sorry. This actually was short. I mean, the vol was short, and this went above the first standard deviation. We're a little bit. There we go. So this break sold down. The vol came down, and the price floated up. Here was a nice bump out to the outer areas, and where did it? It's over here. So here we go. So here we broke out, and then if we broke down, reached its target. And the slope was nice and long. So when you break, your threshold levels on your time frame, you know that you can trade from level to level on the threshold. Okay. Oops. There we go. Okay. So a 2-3 break. Um, that's pretty good. Got to the 4 and the 5. So that, of course, can be measured and plotted using your other tools in Bloodhound and Blackbird. Oops, not doing too good here. Did it 3 times. Sorry. Hang on 1 second. Okay. So measure, the volatility PT levels, and then you can see when you get into these situations where the price and vol are leaving their for standard deviations and going to the outs, the twos and the threes, that you've got this upslope on your range expansion on your PT2 oscillator, and match that condition and try to make the trade. All right, so PT2 indicator is available. NinjaTrader, you can get a 1 month subscription. Check it out. And the VIX data is separate. You can order the CBOE data package through your NinjaTrader platform when you log in to your account. Go to your profile settings. They've got the data plans placed in there that you can find, and learn to know where you are at any given time inside that first standard deviation where price loves to spend most of its time, so that you can just shoot for the smaller targets if you're going to attempt to trade inside that zone, and or wait for your breakouts and then jump into the market to participate or hedge. Know where your hedges are. um, you can do this on multiple time frames. I'm just showing you daily. The same um, probability structure can be put on other higher time frames: weekly, monthly, uh, daily data. So, or you can make up your own custom time frame, and you can start drawing your little bell curves, and at least have an idea when that first standard deviation is breaking and what that looks like, whether there's an opportunity, or not, and what that might look like. All right. Let me know if you have any questions, and thank you so much. We'll talk to you later.